Do you know what I find completely astounding? Is that in just the past week, I've seen more than one article in the financial news about investment professionals, people that are involved in investments for a living, losing a huge amount of money, all because they had positions open where they hadn't capped their downside. So they didn't have the equivalent of a stop loss or some sort of hedge in place to limit the amount of money that they could lose. And in one of these cases, the person actually lost 80 or 90% of their client's funds. That's a huge amount of money. Now, if these are the professionals, these are the people that are being paid to do this for a living, then what do you think that private traders at home trading on their laptop are going to be doing? Of course, they're going to be doing it as well. And I see it all the time because people get in touch with me and say, I've lost a huge amount of my account because I thought this situation, this trade that I had was so good. And then when it started going against me, I still thought it was good. It had lots of potential upside. They're basically fighting against the market. And what we know about that, if you try and fight the market is always going to win. Now, this reminds me of a study I saw years ago that was performed by FXCM, the broker, and they were looking at their own clients because they could see, it was a long time ago that I read this, so I don't know the exact figures, but it was something like over half of all trades that are closed on their platform are closed with a profit. Yet, most of the clients are ultimately losing money overall. So they wanted to figure out why this was the case. So they were looking at what makes a successful trader. Now, when they looked at this, it wasn't necessarily that people were over trading, opening too many positions and all of these were accumulating bigger losses. It was more that the people were holding on to losing trades for too long. They weren't cutting these losses. They were probably holding on, hoping that it's eventually going to turn into a profit. And we know this is not a good thing to do because eventually, like these investment professionals we've seen in the last few days, you're going to have that disaster event where you're going to wipe out a huge amount of your capital.
We start with an enormous respect for the risk of execution. I don't worry a lot about it being too good. You know, that it'll overwhelm me with riches. The problem is always, what's the downside? And if you can control the downside, you can control risk. In my career, there have been lots of skeletons along the way, and they have generally been people who have taken unrelated, in other words, where, you know, no cap, in other words, just open, you know, sign the loan.
Now, I know from my own experience how tempting it can be when you've got a great situation to just not have a stop loss because you're so sure that you're going to make profit that you just want to leave it open-ended. You don't want to have the situation where your stop loss is triggered and then it fires off and you would have made a huge amount of profit. So there's always that temptation. And there's always the situation that I find myself in quite often. I have to admit, I don't do everything perfect. I'm not going to claim that I do. I open a position sometimes and know where my stop loss should be, but then I'm trying to get the trade open that I forget to actually put the stop loss in place. So in my mind, I know the stop loss is going to be based on this part of the chart, this certain price, but then I don't actually place it when I'm opening the trade. Now, sometimes I'll pick up on that after the fact and then put it in place afterwards, like maybe a minute later or 5 minutes later. But sometimes I'll close the trade and look at it then and be like, shit, I didn't have a stop loss in place for all of that trade. Now, luckily, touch wood, I haven't had a situation yet where I've been made to suffer because of that, but it could happen. And, you know, my advice to myself here would be that I should keep a checklist to make sure that when I'm opening a trade, I'm not missing that one out. Because sometimes we think that we know enough that we start getting complacent, and that's not a situation we want to be in. But if you're one of these traders that are not using a stop loss at the moment, who think you're just going to wing it or you're just, you know, shooting for the stars with every trade and you don't want your stop loss triggered, let me try and convince you of a way that you can use stop losses to your advantage that makes it worthwhile using one in the first place. Now, when I'm trading, the first thing I'm looking at in, let's say, 80 or 90% of the situations is the downside. I'm looking at the downside first because when we're trading, we want to trade asymmetric situations where the potential profit is going to be bigger than the potential loss. Now, this doesn't happen just because you decide that you're going to have your stop loss as a third of the size of your take profit. That's not a good way to trade. Instead, it needs to be that you're trading actual asymmetric situations. Situations where the potential downside is just naturally capped, in the market's capped. So let me give you an example. Like right now with the S&P 500, we're at highs. Now, if I was going to go short from here, because I am quite interested in trying to find an entry, and I'll tell you why in a second, but if I was going to go short here, then I know that the potential loss is going to be capped at the next high. So if it's going to go against me, then I'm willing to stay in that trade as long as it doesn't exceed the high that it's just been at, because beyond that point, it might trigger stop losses, have a breakout, catch momentum, and it's just going to, have an exponentially larger loss at that point. So I know that that loss is capped at that point there. So this is what I do with all of my trades. If I'm looking at that loss being capped there, and I know that I have a potential entry, then all I need to figure out is, where do I think the price is going? Does it have enough potential that it's asymmetric when compared to that loss? So it's by having that stop loss, by knowing that my loss is capped at that point there, that it starts off the whole calculation, the whole analysis of whether this is a viable trade. Now, in most situations, like the current situation with the S&P, there are lots of potential outcomes that can happen on the profitable side. Yes, it could crash, it could be a correction, and I could make a fortune by being short at this point now. Or it might just be a small, like 1 or 2 candle reversal before it pushes up against me. Now, with these different outcomes, I've got to look at 2 different factors. I've got to look at the probability of it happening, and I've got to look at how much profit it will make if it does happen. So for example, if I think that there's a very high probability of it only reversing a small amount before it moves against me, and that's not asymmetric, the loss is bigger, then I wouldn't want to go for that trade. So you see how having that loss there, that loss capped, by capping my downside, I can see if it's a viable trading situation or not. And often by having that downside capped, you'll surprise yourself at what could be a potential trading situation. And just to say, with the S&P at the moment, I'm not 100% convinced yet that this is the moment that it's going to drop, but I'm keeping an eye on it. But at least I know at any moment in time where my loss is capped there. So I can have that stop loss triggered 10 times as long as the potential profit is more than that. And it's by having that loss, that downside capped, that I can figure that out. And that's how you're going to succeed over the long term. Because just like we were talking about in the video yesterday, when I showed you the clip from Tom Barrack, he said it's all about being able to assess the risk. Being able to tell when a situation is too risky or not. So if I was going to go back all those years to when I first started learning to trade and I was going to convince myself of using a stop loss, I wouldn't be talking about it protecting my downside, because we all have that loss aversion to a certain extent, some of us more than others, that we don't want to take a loss. So for me, having something that's going to trigger a loss wouldn't sound so good when I'm first learning to trade. But if I point out to myself that a stop loss can actually be used strategically, and it's a big part of a strategy using a stop loss, then it might sound a bit more interesting. And so I hope to get that into your head now as well, and that you'll be convinced to start using a stop loss and don't end up like these nutters who have an open-ended position that just drains their cash and ends up burning out their account. So guys, I think that was more of a trading thought of the day rather than a structured lesson. But if you liked, then please do hit the thumbs up button to let me know. And if you have any questions, if you'd like me to explain something in more detail or go deeper into one particular area of that, then leave a comment down below and let me know. That way I can either respond down there or make a follow-up video to go into one direction in a bit more detail for you. And don't forget to subscribe so you don't miss out on any of the other videos we have coming out. We've got plenty coming up for you. Thanks a lot for watching. Be safe with your trading. Take care, and I'll see you in the next video.